How has Warren Buffett's portfolio transformed over the past decade? Why did he admit that Kraft Heinz was a mistake? And why he bought Apple but recently sold half of the position? In 2013, Wells Fargo topped Berkshire Hathaway's portfolio as the largest holding. Back then, the stock was priced around $40 per share. Fast forward nearly 12 years and it's climbed to around $71, respectable 77% increase, though not particularly remarkable over that time frame. Meanwhile, Coca-Cola was the second largest holding. Buffett's affection for Coke goes beyond the numbers. He is a well-known fan of the Sherry Coke, reportedly drinking several cans a day. Berkshire began investing in Coca-Cola in 1998, and by 1989 their stake exceeded $1 billion, securing its position as a top holding. Today, Coca-Cola is the fourth largest position that we're gonna analyze later. 2016 has represented an important year for Berkshire and Buffett. Warren Buffett's Berkshire Hathaway, in partnership with 3G Capital, facilitated the merger of H.J. Heinz and Kraft Foods, creating the Kraft Heinz company, being the largest holding at that time, around 20% of the portfolio. But after some time, Warren explained that it was kind of a mistake because they paid too much for that company. The mistake was rapidly overlooked thanks to a great bet that he had started on the Apple stock, which was a holding below 1%. Apple P ratio was around 11, while today is sitting around 39, more than 3.5 times higher. So we can understand why he started investing in the company, not buying only a wonderful business, but an undervalued one with a great moat. Over the course of a year, Apple experienced rapid growth. Apple had grown to dominate the portfolio, accounting for over half of its total value. This remarkable growth was driven by the company's consistent innovation, strong financial performance, and dominance in its market segments. Apple proved to be an exceptionally lucrative investment, with its stock price steadily increasing quarter after quarter, fueled by record-breaking revenues, strong product demand, and successful expansions into services and emerging technologies. However, in 2024, he began significantly reducing his Apple holdings, trimming it down to around 25%. But what led him to sell so many shares? Why Warren Buffett's Berkshire Hathaway has recently reduced its stake in Apple? Here are the three main reasons. The first one, market valuation concerns. Buffett has voiced concerns about elevated stock market valuations. According to data, the valuation appears exceptionally high, signaling potential overvaluation as future growth is not expected to match past rates. While Apple remains a top-tier company with a remarkable return on invested capital of around 39%, placing it in the top 10% of its industry, and an impressive net profit margin of 46%, its current P ratio of 38.55 is over 3.5 times higher than it was in 2016, when at that time Buffett first purchased Apple shares. The free cash flow yield also is at its lowest level, which is another sign of overvaluation. The second reason is tax considerations. With potential increases in corporate tax rates, Buffett aims to capitalize on the current 21% rate by realizing gains now, thereby minimizing future tax liabilities. And the third reason is portfolio diversification. Apple's stock once accounted for nearly half of the Berkshire's investment portfolio. Scaling back this position helps reduce risk by avoiding over-reliance on a single asset. At 94 years old, Buffett, who has been at Berkshire's helm since 1965, is also laying the groundwork for a leadership transition. Now, let's dive into the top 4 stocks, each making up over 10% of the portfolio. The first one is Apple. It's the top holding of Warren Buffett with a share in portfolio of 26%. The P is very high, well above the average of past years, so it's a clear sign of overvaluation, and I think the main reason why Buffett sold half of the holding. Warren Buffett loves dividend payers, and Apple is a good one with a free cash flow dividend payout ratio at almost the lowest level in the last decade. So we can expect great increases over the coming years. Over the last 20 years, this stock has increased over 760% and paid a lot of dividends, but the current dividend yield is very low, so it's also a sign of overvaluation. Bank of America is the third largest holding, being 11.8% of the total portfolio. In 2016, amidst financial uncertainty, Buffett invested $5 billion in Bank of America through preferred shares, which yielded 6% annually. The current P ratio is 16.6 and is above the 13 value of the last 3 and 5 years. Coca-Cola, 10.8% of the portfolio, has historically been a strong investment, but the company is currently facing challenges with weak free cash flow. The price to free cash flow ratio is at its highest level in 20 years, significantly exceeding the historical norms. While the dividend yield of 3.13% is above the average of past decades, the free cash flow dividend payout ratio remains alarmingly high. And this creates a growing risk of potential dividend cut. Thanks guys, I hope you enjoyed the video, and if you appreciate my work, please subscribe, like, and hit the bell for the notifications. Thanks, bye bye.